Good morning to all traders and welcome to this Friday's market insights video provided to you by Orbex. It is the 3rd of April today, the day we also have a webinar for the NFP later in the session. Of course, I'm expecting you to join, talk about currency pairs and the economies. Now, on the most interesting news for this morning, we've had Mr. Trump pretty much he tweeted that now the Saudi Arabia and also Russia are going to be cutting as much as 15 million barrels per day. That, of course, supported the oil market. And with it, since we're going to talk about FX measures today, the dollar CAD moved a little bit lower. So we need to see what's really going to happen in the dollar CAD, however. And along with that, of course, is our outlook for the oil, because the Canada is very affected. The Canadian dollar very affected by the oil market, of course. Now, on other news, we've had the UK pushing back on Brexit promises. So we're going to look at how this is likely to affect the pound. Euro is likely to be affected, of course. That we're going to see, and generally speaking, the coronavirus inflicted economy is being affected by different events as well, different factors, different components. Now, which one is going to shine first in the end, that is a different case, but we're going to explore all those on the technicals. Okay, so I want to start with the USD CAD today. USD CAD, I'm looking at this as an upside, right? So I'm still expecting, we've got a leading triangle here, a triangle for a correction over here. We've had wave 3 done. I'm expecting wave 4 and then wave 5. Now, since we've done 1, 2, and 3, and 4, I'm expecting another move down here to take out wave A. Then probably we're going to see a correction and then another impulse to the downside. We're going to get at least probably down to the 138 or so, and then start moving higher. Now, depending on what will happen in the oil market, if this arrangement with Saudi Arabia and Russia really works out, I mean, I don't know where Trump got this news and he just decided to tweet about it. We could see prices moving even lower, right? But I don't expect to see that going below the 136.60 or so, okay? Because this would invalidate this move to the upside being impulsive, and this move to the upside is impulsive because it's holding from quite a few years back in the cycle degree. Right now, we could have ended a correction here. If that is the case, that means we're going to get a zigzag, right? A double zigzag, if you may. So we're going to have ABC, ABC, and ABC, 3 times 3 waves. Now, that's for the CAD. I want to go, let's just go on the euro dollar. Okay, euro dollar, we've been looking at this. Actually, we were debating whether we're going to get an ABC, ABC, and ABC, or whether we're going to get an AB and a C. Now, it looks like, of course, the second scenario is in play here. Okay, so we've got an impulsive move to the downside to complete wave A. Okay, now that looks like a 3B to me, and we went exactly at the 61.8 Fibonacci retracement of this move to the downside. And it looks like now we're going to get another impulse move to the downside. Now, if we pull the Fibonacci extension, it could take us anywhere to the 1047, which is around the 105, or even down to 1.3, okay, at least in this current structure. Now, the thing is that this impulse to the downside could really take us anywhere below the 1065. Now, the rest, of course, how quickly after this false break occurs, right, we're going to see prices reversing rather than correcting is unclear. But given that the coronavirus worst has probably already taken its chances in Europe, we might see the euro actually turning faster than either the pound or the dollar, if you may, because they don't have still locked down domestically both the UAE and the US. Whereas in the European Union, most of the cases are actually started dropping as well now in Italy and Spain. Now, dollar yen quickly. We're looking at a similar pattern over here, right? So we still got 1, 2, 3, 4, and 5. ABC for B, and I'm expecting another move to the upside. That is going to be part of the correction, of course, right? This is a move to the upside that is still part of a correction, larger term correction. Now, the question is, I mean, we've had waves A here, B and C, right? The current structure suggests us that I'm not really convinced with this wave C, okay? So we could move a little bit higher and then get another move to the downside to take out at least the 50 Fibonacci retracement at 106.50, okay? Once we get there, then we can start looking for prices to start moving up impulsively again, and this impulse could take us near the 118, okay? I wouldn't be surprised if that happened. Now, how low, if we go low, we are likely to go, then this really depends on whether safe haven flows will start going into the safe haven yen, or we see a preference on the Swiss franc and gold, okay? I mean, if we take Japan's economic situation into consideration, then the latter might be the case, right? Now, pound, I've been talking about this ending down here as a triangle in the longer term, right? We've had 1, 2, 3, 4, and 5. That ended wave A down here, right? Now, then we had an ABC, and we went near to the 125, which is also the 61.8 Fibonacci retracement between here and here. So I'm expecting another impulsive move to the downside to take out wave E, right? Now, if that doesn't happen, it means that we've had an AB and a C over here. And that will suggest that once we get there, we're going to correct a little bit lower, probably to the 120 or so, and then start moving higher. But I really see this from 114 to 111 or so. This is like 4,000 pips points. So it is quite a big of a room to leave without taking advantage, right? Whereas in the case of a downside here, and because there is probably more downside likely to come due to Brexit and the coronavirus late responses of the UK government, then that would make more sense, and that would actually bring the pound to a very better position to start buying.